Hello students, welcome to my YouTube channel Rising Sun. Today we will be discussing a problem on cash book from chapter 5, which is subsidiary books. We would be referring page number 134, illustration 3 from textbook of standard 11th commerce. Here we have asked to enter the following transactions in cash book with cash and bank columns. So this cash book is two column cash book where there is a column for cash and a separate column for bank on the receipt as well as payment side. First, let's understand the format of the cash book. The cash book is divided into two parts. The left hand side is the receipt side, while the right hand side is the payment side. First column is date, second is receipt. R number represents the receipt number, L number ledger folio, LF is the ledger folio, cash column, bank column. Similarly, the right hand side will also start with date, payments, voucher number, ledger folio, cash column and bank column. Hence on the receipt side there will be two column, one is cash and one is bank. On the payment side, cash and bank column. Any receipt in cash is recorded in the cash column. Money received in cash is recorded in the cash column, and money deposited in the bank or any cross check received is recorded in the bank column. Similarly, any payment made in cash is recorded in the cash column on the credit side, and any check issued to the party or the payment made through the bank is recorded in the credit side in the bank column. In this way, there is a format of cash book, two column. Let's go to the problem now. Here we have been given transactions for the month of October. 1st October 2019, cash in hand 13,000 and bank balance 24,000. It represents that the business has 13,000 rupees opening balance of the cash and 24,000 rupees balance in the bank as on 1st October. So this is the opening balance of cash as well as bank. Cash balance or bank balance both will be shown in the receipt side as an opening balance. Hence, it will be shown as to balance brought down 1st October. 13,000 is written in the cash column and 24,000 is written in the bank column. Then on 3rd October, transaction is as follows: cash sales 80,000 at 10% trade discount. So there is a trade discount of 10% on cash sale. Here the journal entry will be cash account debit to sales account, and the amount after deducting trade discount will be, see, value of the goods is 80,000 less 10% trade discount. 10% of 80,000 is 8,000. So the sale will be of 72,000. cash account debit 72,000 and sales account is credited 72,000. Hence, the cash account is debited. We will go to the receipt side on 3rd October. Since the cash is received, we are coming on the receipt side. Date 3rd October, and here we will write the name of the account which is credited. So sales account is credited. We will be writing to sales account, and 72,000 is written in the cash column because the money is received in cash. The cash account is debited. Hence, we will write in the cash column. Narration is written below, which acts as a brief description to the transaction. So, narration is started with the word being goods sold for cash. Let's go for the next transaction. On 5th October, cash purchases means goods are purchased in cash worth rupees 60,000 at 10% trade discount and 5% cash discount, and the amount is paid in by half amount by cash and half amount by check. So first, let's calculate the value of purchases. Let's calculate the value of purchase. Now, purchase will be value of the goods. Here you can see is 60,000. First reduce trade discount and subsequently reduce cash discount. So first we will reduce trade discount from 60,000. 60,000 value of the goods less trade discount, that is 10%. Trade discount is 10%. So 10% of 60,000 is 6,000. 54,000 is the purchase, and now on 54,000 we have to calculate cash discount, that is 5%. Let's calculate cash discount. Let's reduce cash discount from this purchase value minus CD is cash discount. 5% of 54,000. Let's calculate 54,000 into 5 divided by 100, 2,700. After reducing cash discount, we get 51,300. So the payment to be made after deducting the cash discount is 51,300. Now this amount is given by way of cash and check. So half the amount of 51,300 is given in cash, and the remaining balance 50% is paid by check. So if we divide 51,300 by 2, 25,650, the payment will be made as follows: 25,650 in cash, 25,650 is made by check, Value of purchase is 54,000 and discount is 2,700. Now since this transaction is related to payment, we will go to the credit side of the cash book. Date 5th October. We are making payment on 5th October. On the payment side, we will write by purchase. The journal entry is purchase account debit to cash account credit to bank account credit to discount account. If you write down the journal entry, it will be as follows. Purchase account debit, purchase is 54,000 to cash account, cash goes out to bank account, bank is the giver, to discount received account, we are receiving the discount. So all these three accounts are credited. Cash given is, just we have calculated, 25,650. So 25,650 payment is made by cash, 25,650 payment by check, and 2,700 is the discount. Purchase is an expense, debit all expenses and losses. Cash goes out, credit what goes out. Bank is the giver, credit the giver. Discount here is income because we are receiving discount. Credit all income and gain. By this rule, we have come to the journal entry purchase account debit to cash account to bank account to discount account. So now in the cash book we are concerned with cash and bank only. So since these both are credited, we will go on the credit side and we will write the name of the account which is debited, that is purchase account. So here on the credit side, date 5th October, in the credit side payment column we will be writing the name of the account that is debited, just as we have seen the journal entry. Purchase account is debited. Cash column we will be writing 25,650 because cash is credited and bank is also credited. Cash and bank both are credited. 25,650 and 25,650 being cash purchases, that is being goods purchased on cash. Let's go to the next transaction on 7th October. You can see cash is deposited in the bank. Cash is deposited in the bank. So the journal entry will be bank account debit to cash account. Bank is the receiver, debit the receiver. Cash goes out, credit what goes out. 40,000 is deposited in the bank. Such entries where the cash book contains the debit and credit effect in the same transaction itself are called as contra entries. Here you can see the cash book is debited as well as credited. Such entries are called as contra entries. Now on the debit side of the cash book, that is on the receipt side, we will be writing 40,000 in the bank column because entry is bank account debit to cash account credit. So since bank account is debited, on the debit side of the cash book we will write the amount in the bank column, and since cash account is credited, on the credit side of the cash book we will write the amount in the cash column. On 7th October. On 7th October, we have written the date. In the receipt column, we will be writing the name of the account that is credited. Here, cash account is credited and amount is written in the bank column because bank account is debited. Since bank account is debited, we will be writing the amount in the bank column. C is written here indicating contra entry. Similarly, on the same date, that is 7th, we are writing the credit effect in the cash book. In the payment side, we will be writing the name of the account that is debited. Here bank account is debited, so we are writing by bank account. Since cash account is credited, we are writing the amount in the cash column. And C is written in LF indicating contra entry. In this way, contra entries have both debit and credit effect in the cash book itself. Let's see the next entry. Let's see the next transaction. Here we can see on 9th October received bearer check from Sumit. Bearer check indicates cash because cash can be received directly against bearer check, but in case of cross check, the money is deposited in the account first. From there a person can withdraw. So bearer check is always treated as cash. Here the transaction is received bearer check from Sumit. So it itself is like you have received cash from Sumit. So the journal entry here will be cash account debit to Sumit credit. Since bearer check is considered as cash, we will give the entry as cash account debit to Sumit account. So on the debit side, that is receipt side, on 9th October we are writing the name of the account which is credited, that is Sumit account is credited, and the amount is written in the cash column. Amount is written in the cash column because cash account is debited, being cash received from Sumit. Let's see the next transaction. Transaction dated 13th, sold goods for cash 12,000 at 4% trade discount. So first, to find out the value of the sales, we have to reduce 4% trade discount from 12,000. Let's calculate 12,000 into 4 divided by 100. 480 is the trade discount. From 12,000 we will reduce 480. 11,520 is the value of sales after reducing trade discount. So on 13th October, the journal entry will be, since goods are sold in cash, the journal entry will be cash account debit to sales account credit. Cash comes in, debit what comes in, and sales is an income, credit all income and gains. So cash account is debited, we will go on the debit side or the receipt side of the cash book 13th October, and we will be writing the name of the account that is credited. It is sales account. Amount is written in the cash column because cash account is debited, being goods sold in cash. On 15th, paid life insurance premium. So life insurance premium here is considered as drawings. The owner is paying his own life insurance. It's not related to the business or the factory. It's the personal expense of the owner. Hence, it is treated as drawings, and the journal entry will be drawings account debit to cash account. So here we can see the cash account is credited. There is a payment made in cash. We will go to the credit side of the cash book, that is payment side. On 15th October, we have written the date. We will write the name of the account which is debited. Drawings account is debited. We are writing it in the credit side, and the amount 4,000 is written in the cash column because cash account is credited. In this way, drawings account debit to cash account has been posted in the cash book. Let's see the next transaction. Here, dated 18th October, the check received on 9th October, that is this check received on 9th October means this check has been deposited in the bank. It means that the check of 9,500 from Sumit, which was received on 9th, is deposited in the bank on 18th. Now, since we have considered the bearer check as cash, we will consider this as cash deposited in the bank. Since here we have considered bearer check as cash, we will consider on 18th as cash deposited in the bank. So again it will be a contra entry because the entry will be bank account debit to cash account. Bank is the receiver. The rule is debit the receiver. Cash goes out. The rule is credit what goes out. In this way, bank account debit to cash account credit. Since the debit and the credit effect on the same date appears in the cash book itself, the transaction is contra entry. We will come to the cash book on 18th October. Date. The journal entry is bank account debit to cash account. So we are writing the name of the account which is credit over here. Amount is written in the bank column because bank account is debited. C indicates contra entry. On the payment side, 18th October, we will be writing the name of the account which is debited. Bank account is debited. So on the credit side, we are writing the name of the account which is debited. And the amount is written in the cash column because cash account is credited. Here we are in the credit side. C indicates contra entry. Let's see the next transaction. On 22nd October, received cross check from Prabhakar. Cross check, whenever there is cross check or you are receiving money by cross check, the amount or the money is deposited in the bank. So the bank account will be debited. Money will be deposited in the bank. So bank account will be debited and Prabhakar will be credited. Bank is the receiver, Prabhakar is the giver. Debit the receiver, credit the giver. Bank account debit to Prabhakar account. So here on the debit side, dated 22nd October, the name of the account that is credited is Prabhakar. So here we will be writing to Prabhakar account. Cash book is a journal as well as ledger. Hence we are writing the narration and we are posting it as ledger. And the amount 6,000 is written in the bank column because bank account is debited. So on the debit side, we are writing in the bank column. Since bank account is debited, we are writing the amount in the bank column. Narration being cash received from Prabhakar. It's the cross check. We are receiving cross check from Prabhakar. Hence, we have written it in the bank column. On 27th October, introduced additional capital 25,000 and deposited the same into the bank. So, money is deposited in the bank in the form of capital. So, the entry will be bank account debit to capital account. Bank account is debited. So on the receipt side, we will go to the bank column. October. Receipt side, that is debit side. Here we are writing the name of the account that is credited. So to capital account is credited. And 25,000 amount is written in the bank column because bank account is debited. The money is deposited in the bank. So we are writing the amount in the bank column. Being additional capital brought, narration. On 28th, electricity bill of 3,000 and telephone bill of 4,100 has been paid. So this is paid in cash. The journal entry will be electricity bill account debit, telephone bill account debit to cash account. So the cash account is credited. There is a payment made in the cash. Hence both 3,000 and 4,100 will appear in the cash column on the payment side, that is credit side. On the credit side, 28th October, we are writing here the name of the account that is debited. So electricity account by electricity account and amount is written in the cash column. The payment is in cash. Cash account is credited. Hence we are writing the amount in the cash column. Similarly, 28th October by telephone bill account. and amount is written in the cash column. Being electricity bill paid and being telephone bill paid. On 30th October, received cross check for dividend. Cross check indicates bank. When you have received the cross check, the amount will be deposited in the bank. So bank account will be debited, and dividend is an income. The journal entry will be bank account debit to dividend account credit. On the receipt side, in the bank column, we will write the amount. On the receipt side, in the bank column, we will write the amount. 30 October. On the receipt side, here we are writing the name of the account which is credited. So to dividend account, and the amount is written in the bank column because bank account is debited. Being dividend received. Here we have discussed all the transactions. After this, we have to balance the cash book. To balance the cash book, first take the total of the debit of the cash column. Take the total of the debit side cash column. Then take the total of the credit side cash column. So we have to add all the receipts, cash receipts, 1, 2, 3, 4. Add all the cash receipts, which is 1,06,020. Let's see the credit side total of cash column. In the credit side total of the cash column, we have to add 25,650 plus 40,000 plus 4,000 plus 9,500 plus 3,000 plus 4,100. 86,250. 86,250. This is the total of the credit. As you can see, the total of the debit is big than the total of credit. Total of debit 1,06,020 is big than the credit, that is 86,250. So we will reduce 1,06,020 minus 86,250, that is credit total. So amount is 19,770. This is the balancing figure, and that will appear here in the credit side because the debit was more. Remember always that cash account will always have a debit balance or zero balance. The cash account will never have a credit balance. So debit balance indicates the debit total is more than the credit total. Here the cash account is showing a debit balance of 19,770, which is the closing balance and is taken as an opening balance on 1st November. The closing balance of 31st October is the opening balance of 1st November. Cash. Similarly, the bank column on debit side total, we have to take the total of the bank column on the debit side and take the total of the bank column on the credit side. After reducing the debit total, after subtracting the debit total and credit total, the difference is 85,100, which we can see here. It is the difference of the debit and credit total. Since debit total is more than the credit total, the difference is appearing here in the credit side, indicating the bank column having the debit balance. On 31st October, 85,100 is the closing balance, which is transferred to November 1st as the opening balance. Here the bank account also has the debit balance. The debit total of the bank account is more than the credit total of the bank account by 85,100. Hope students you could understand this problem and you found this video useful. If you find this video useful, please like, share and subscribe to my channel. Thanks for watching till the end.